Dear friends, welcome to weekly view on markets. Markets consolidated during this week after sharp run up in the previous week. Banks and financials ended with small gains during this week. Mid-cap sector lost around 1%. Crude oil prices have dropped to pre-Iran war levels after Hormuz channel is open for ship movements. But still some confusion uh, continues as there are attacks on ships, and US has also attacked Iran. Delay in monsoon is another worry now for the markets. Markets are likely to continue consolidation and follow global markets in the coming week. Charts also indicate further consolidation. Nifty has closed at 24,056. It has lost 112 points, that is around 0.46% down. Bank Nifty has gained around 213 points, that is 0.37%, and closed at 58,177. Bank Nifty closing above 58,000 is a good technical indicator. Mid cap index had touched almost all time high, and after that it has slightly corrected on Thursday, closed at 61,795. It lost 583 points, that is almost around 0.94. Small cap index has closed at 18,790, and during the week it crossed 19,000 also, but at the weekend it has closed at 18,790, and it has gained 84 points. India VIX is steady at around 13.05. Market was consolidating with negative bias. We can see more sectors in red compared to the sectors in the green. Pharma sector gained around 2.83%, healthcare sector gained 2.63%, private banks gained around 1%, auto sector, realty sector, NBFCs all gained 0.7 to 1%, and they were consolidating. Metal sector lost big, more than 4%. Information technology sector continues to be weak. This week also it lost around another 4%. Consumer durables lost around 2.8%. Commodities, public sector companies, energy sector, PSU banks all lost around 2%. Oil and gas, defense sector, manufacturing sector all lost between 1 to 2%. FMCG and infrastructure consolidated with small losses. There were more declining stocks during the week than advancing stocks. Now, let us look at technical charts. This is the chart of Nifty index. This is a daily chart. Here we can see Nifty is showing a kind of consolidation. It gave a run up from 23,000 levels to 24,000 level. It has closed at 24,056, and at around these levels, Nifty is showing a kind of consolidation during the week. Nifty has got resistance at around 24,500. It has to take out this 24,500, then we will see further up move. And next resistance is at 24,750, shown by this second line. If these two resistance lines are taken away, then we will see big up move in Nifty index. And Nifty index has support at around 23,750 followed by 23,200. This is the daily chart of Nifty Midcap Index. Midcap Index has, as we can see, touched all-time high level of at around 62,700, and it has after that slightly corrected on Thursday and closed at 61,795. And we can see here a kind of consolidation. Uh, the charts indicate that this consolidation may continue in the next week as well. If there is a correction, it has got good support at around 58,000 levels. If it drops below that, then there is a strong support. Next support is at around 52,000 levels. This is the chart of small cap index. Nifty small cap index has given a sharp run up from 17,750 to 19,000, and now last 3 4 candles are showing a kind of consolidation, and this consolidation is likely to continue in the coming week. And if it crosses this 19,000 level, then we will see a further sharp rally. And if we look at weekly chart, small cap index has made a high of around 19,600. That means we are nearing a all-time high on Nifty small cap index also. This is the chart of Bank Nifty index. Bank Nifty index has crossed crucial resistance of this around 57,000, and it has closed above that. And Bank Nifty index has given a sharp run up. After that, we see kind of consolidation and small correction on Thursday with a red candle. And next resistance for Bank Nifty is at around 60,000 levels, shown by this resistance line. If it crosses this, then we will move towards all-time high of around 61,500 for Bank Nifty index. Now let us look at some of the macroeconomic parameters. Foreign exchange reserves for the weekend has been at 672 billion US dollars. It is up by around 1 billion US dollars during this week. Foreign exchange rate is at rupees 94.40 per dollar. From around 95.50, it has come down to 94.40. So rupee has strengthened. Dollar index from around 99 level, it has crossed 100. Now it is at 101.37. Gold price is quite steady at 1,44,200. Gold and silver have been correcting in the past few weeks. Crude price is at $72.95 per barrel. From around $90 per barrel, it has dropped sharply, and now Indian crude basket is at around 70. So this is a good news for Indian economy and also for the Indian stock market. Inflation is likely to come down if the oil prices come down, and also rupee is likely to strengthen as our foreign exchange outgo will be less. G sector bond yield benchmark is at 6.77%. Let us look at FII and DII data. On Monday, FIIs have sold 635.91 crores, and overall for the week they have sold 2077.69 crores. So FII selling has reduced, and on certain days they are buying also. DIIs continue to buy. They have bought 11,100 crore during this week. The overall macroeconomic parameters look quite good for India. And if Iran and US peace deal holds, and if there are no global disruptions, Indian markets are likely to go to higher levels. And also, the first quarter is coming to an end by this June 30th, and markets will focus on quarterly results. That is, quarter one results will start coming up by second week of July. Mutual fund investors should continue their SIPs, and since a lot of global tensions have been cleared, investors can look at investing in lump sum amount at this point of time also. And there is one more new product that has come into the mutual fund market, that is called SIF, Specialized Investment Fund. Many AMCs have launched SIF. SIF is also called mini PMS. It is between the PMS and mutual fund. SIF ticket size is around 10 lakhs, and they are allowed by SEBI. The fund manager is allowed by SEBI to take adopt derivative strategies, and with that fund manager will be able to protect the downside during market corrections. And there are two categories in SIF. One is called hybrid long short fund category, and another is equity long short fund category. Those people who don't want to risk 50 lakhs in PMS, for them this is a quite a good product for long term. And in hybrid long and short, they are offering equity taxation with debt returns. So investors who are in 20 to 30% income tax bracket, for them hybrid long short is a good product. So this is all for this week. If you like my video, please subscribe to my YouTube channel. You can ask your questions, which I will reply. We will meet again next week. Thank you.